Well, welcome back. Let's take a look at what the markets are doing now with our quotes provided by Bar Chart. Let's take a first look at corn. And on the big board here, we are hanging on to strength. We have December corn still 14 higher. We're at 694 3/4. It did get as high as $7 exactly in the overnight trade. It just touched it and then backed away from it a little bit. March is now 12.5 cents higher. All right, let's go to soybeans. Check them out. On the January contract, we'll go with that. We have January 9 1/4 higher now at 14.09 1/2. That would put it about 8 cents off of its earlier low. I want to check out the wheat market. That's where most of the interest is today. And well, after selling off right at the open and then rallying, then selling off, right now it's starting to firm up again. December wheat in Chicago, 55.5 higher now at 884 3/4. There's getting to be some big numbers again. It had a high overnight of 893 1/4. Checking out the Kansas City market here this morning. We have December 55 higher at 980 per bushel, at a low of 955 1/2 after it absorbed a round of selling, and now it's really bouncing back pretty quickly here. Now we're, we're within about 2 cents of our high of the overnight and early morning trade. Now on spring wheat in Minneapolis, December 36 higher at 981. Interesting trades going on here so far today. I also want to see what cotton is doing today. Let's take a look here. And we have December down 93 points lower at 71.18 per pound, as cotton continues to not be able to find a friend the way it seems. I want to welcome aboard Chris Swift, and he is with Swift Trading, of course, in Nashville. Good day to have you come in.
Yes, good morning.
Nothing to talk about today.
I tell you, ever since Saturday morning, I woke up, I've been waiting for last night's opening. So,
you know, you and I were both talking about that.
Yeah.
We got the news alerts. I know you and I both watched that, and it was like, oh my gosh, what is going to happen Sunday night and Monday morning?
And it happened.
And it did. It kind of blew up on Sunday night on the open, and it just kind of, it sold off a little bit, but all in all, it just kind of stayed there, didn't it?
It kind of exposes where we are in our supply situation, and that is we are at our peak for harvest right now. We've got the most amount of corn we're going to have for the rest of the year, soybeans, and probably even wheat until we get another crop in to get germinated. So even knowing that, and then to have something in Europe take place that now impacts our markets by that extent, it just shows you how fragile our system is right now.
So from what I heard this morning, the market sold off a little bit this morning around the open on the news that there were 12 ships that made it out of the Black Sea safely, didn't get blown up or anything. But now the market is starting to firm up again. Their attitude must be changing a little bit, that they think that may be just kind of a limited time deal or something. What do you think about that?
From the best that I understand, they have canceled the grain. The Russians canceled the grain deal with the Ukrainians is what I read. So I don't know how much will be going out or if it is now flying under a Russian flag. I just don't know which is the most significant of it. But, when we go back here to the United States again, we've been very, very dry. We probably have a lot of wheat in the ground right now. And as Tim showed a little bit earlier, maybe we get a little more moisture on that. That could dampen things just a little bit towards the end of the week if that rain does materialize.
What about countries that may have purchased grain from Ukraine and they were expecting shipment here in the next month or so? Now what do they do?
That's going to be an interesting facet. If it can't get out, it can't get out. So they go searching for it elsewhere is what they do.
Wow.
And between the U.S. and Brazil, we're about the leaders in soybean and corn. So,
well, and then and then we have the Brazil election.
Yeah, I saw that
yesterday. In case you hadn't heard, now supposedly the Brazilian president lost the election, but there's all kinds of scandals surrounding that apparently, and I don't know if they'll ever get that hashed out. But they had a socialist president before, didn't they? Before he got into office. Yes. What do you think that would mean to the grain market?
Probably a lot to the soybean market. Of course, they always tend to sell most of their beans like we do to China. So it would just be another competition that we would have, and they might start marking their beans down if they become more chummy with Russia or with China with their beans. So,
wow. Okay, a lot to chew on. We're going to take a break right here, and then we'll come back and we'll see how that livestock trade is doing here on a Monday right after this. All right, well, we're back talking with Chris Swift of Swift Trading. And we're talking about the markets here and all the outside influences that are pulling and tugging and pushing on the markets right now. All right, let's take a look at our livestock trade. We'll start with live cattle. On our quotes provided by Bar Chart, we're a little bit weaker across the board. We have December live cattle currently 87 lower. We're at 152.12. So that's off of our early high this morning by about $0.50. Now you have February down 70 cents as we speak. Shifting over to the feeder cattle market with the surge in corn, we're a little worried about what the feeders might do. And they are down, but you know, Chris, look at how they bounced off of their early low today. I want to pick on January here. January had a high this morning of 179.37, and then it dipped down as low as 177.70 in short order right after that. And now we're already back up to 178.47. Yeah, it's down $1.90, but I mean, it's off of its earlier low here by about 70 cents or so. What does that tell you anyway?
There's an undertone in the cattle market in general that suggests that the supplies are going to continue to be limited going forward, and that is our production side of it, not necessarily our cattle on feed. And so I think that whenever they see dips in that, the traders will take advantage of that. But we know that the input costs are really rising high against the cattle feeders. Last week it was all energy and no feed. Now energy is a little bit softer this morning, but feed costs are up. So they're just taking it from every end that they can get, and then you have to go on top of that and bid up for feeder cattle to get them into your yard. So it's a real chaos right now.
I don't know if you saw that. There was a picture I saw over the weekend of a High Plains, I guess it was a grain elevator in feedlot country, where they normally they're just surrounded by corn production, but they were unloading a unit train of corn. They have never imported corn ever. Yeah. And they had to haul in a unit train of corn just to feed all the animals out there.
As much under the impression I am, I think West Kansas is $2 over right now.
My word.
So it's really been devastating. And even the irrigated corn, where they got the big pivots out there and stuff, it didn't do. So it wasn't as much the drought as it was the heat. And I think that's what you see when we get into the northern corn, where it's a lot better out there. Well, it suffered the same types of drought issues, but not the same heat during that pollination. So I think that's what tended to stunt the corn more than anything, was that heat during pollination.
How's that possible to even make money doing that?
I don't think it is. I think we're just trying to break even until better times right now.
All right, that's crazy.
Yeah.
Now, of course, we're into a new month. Does that mean they can draw on contracted cattle right now?
Probably not until tomorrow. Tomorrow,
I'm sorry,
probably.
Sorry.
But they can if they need to. I don't know that there's any kind of great need. The slaughter rate's been around 660, 665 every week now, and there's seemingly greater employment into the yards. So, into the packing facilities. So there doesn't seem to be much disruption there. And of course, right now they want to hold margin as best as they can. So I don't think they're going to increase the slaughter rate at any time soon.
Well, let's take a look at the lean hog trade then this morning. And currently on the lean hog board, well, we're mainly higher. December is still down 12 cents at 85.97, but from February on out, they're 40 to 70 higher. February is up 42 right now at 89.27, and April now 72 higher at 93.42. Chris, I sure enjoyed having you come in. I know you're going to be a busy camper today and answering a lot of phone calls, but thank you for
Always
the
a
time.
pleasure, Marlin. Always, sure.
Yeah, Chris Swift of Swift Trading with us here this morning. Janet, a busy day. Back to you.